the plus side.
Okay.
Hey, Jennifer Nickerson here with Edge Realty. You guys had questions about credit, and definitely a subject we needed to talk about. I'm here with Rhonda Clark at First Arkansas Bank and Trust. Thank you so much.
Thank you, Jennifer, for having me.
You're welcome. My experience with First Arkansas Bank and Trust is a personal experience. I just feel like they're valuable to our community. They truly care. They're just one of those banks you want to do business with. So Rhonda, first tell us a little bit about yourself and how long you've been in the industry.
Okay, great. Well, I've been working for First Arkansas Bank and Trust for 23 years now. So I've been there quite a while and have truly feel like it is a family and enjoy what I do. I started out as a teller when we moved here with the military and just kind of worked my way through different departments and found my love in the mortgage section, and have worked a little bit as a processor, moved into about a month of underwriting, but then found my love in the origination side of it. So I've truly enjoyed First Arkansas.
So you're well-rounded, indeed, and you've served our community well.
Yes, right, yes. Prior to working at First Arkansas, I had actually been in the Air Force, and my husband was active duty as well.
That was awesome.
And we moved from Tucson, Arizona to Arkansas, and we've been here about 26 years, and we've pretty much decided this is where we're staying.
That's great. When we talked about what we were going to discuss today, you brought up an excellent topic, and that is credit.
Right.
So for our viewers, what credit score should a home buyer really want to have to get a mortgage?
Right. Okay, well, it varies on the type of loan that we're looking at. Pretty much on your FHA and your VA, we can go down to about a 620. And from the rural development side of it, we're looking at a 640 range. And conventionally, it kind of depends on credit. It might be a 620 on up, but usually a 640 on up would be better, but we'll just have to kind of look at it, individually and see. But so those are the ranges. You can actually go to annualcreditreport.com and take a look at your credit. Maybe you might want to do that before you came in and just have a good look at it to see and make sure everything looks okay. If there's any errors on there, you can take care of it, at that point. But that will give you a general idea of what's showing on your credit and what we may see as a lender.
Okay, and what was that website again?
Annualcreditreport.com.
Annualcreditreport.com.
There are several out there, but that's a good one. That will give you a more accurate score of what we might see.
Gotcha. What should customers do to obtain that type of score, and what do they do to maintain that score?
Right. Well, pretty much to maintain that score, any credit that you do have right now, if you have a credit card, an auto loan, whatever it is that you're paying on monthly, just be sure that you're making those payments on time. Anything that goes over 30 days late will impact your score greatly.
Okay, so that's not a myth, guys. That is true. Make your payments on time.
Yes, make those payments on time. That's a big deal. And then, if you have a history of making late payments over and over, your score's really gonna, go down. And so just making those payments on time each month is just showing that you can handle this. Mortgage loan is for 30 years, so we want to know, can you make payments on time every single month?
Right.
So, not
that makes sense.
30 year, but right. So that's a big deal. That's a big deal on there. Another thing that they would want to look at on any type of credit cards that they have, pay attention to where your balance is versus the limit that you are at. Keep your limits as low as you can, really. Preferably 30% or less is more beneficial to your score. The higher close you are to that limit, the lenders, they're looking at that, it's going to impact your score. You're kind of showing, hey, I don't need all this money to get by every month, and that you're not using it all the time for everything that you're doing.
Gotcha.
So try to keep those balances low versus your limit. So those are some two big things that can definitely, impact your score and get it going in the right direction.
So so I use one of my cards and I'm around the 30%, but say I want to free up a little bit of money, so I go ahead and I pay that off. Now, do I just kind of leave that open and use it? Does it benefit me more to leave it open and use it occasionally?
Yes, it does, especially if that card has a long history. If you've had a credit card and you've had that particular card, 10, 15, 20 years, don't close it out. Those are good accounts with good history. You don't want to close it out because it'll take that history away.
Oh my goodness.
Right, and your credit score, a good portion of the percentage of where they get that score from is from the history, how long you've had credit. and how good that credit has been. So if you were to close those accounts out that have good history, it's not there anymore, and you're kind of starting over with the remaining cards that you have. And if you've just opened those up, you don't have that long history anymore. So it is beneficial to keep them open.
Wow, you guys heard that. I think I've made the mistake of closing
Have
some,
you?
thinking that would, change
Yes,
it.
a lot of people do. A lot
yeah.
of people do, but it is better to keep them open.
I gotcha.
Just use them every so often,
That makes
to keep
a lot
it
of
active.
sense.
Great.
Rhonda, thank you so much
Thank
for
you,
joining
Jennifer.
me. It's been a pleasure, and I hope this was informative for you guys. There'll be more to come. I definitely want to interview you some more, and we can touch different topics for our viewers.
You bet.
Guys, thank you so much.
Thank
Jennifer
you.
Nickerson, Edge Realty, signing off. Have a lovely day.
Thank you.